Hi, this is Joseph. It's Tuesday. It's September 7th. I hope those of you who celebrated the last holiday of I guess I would call it the summer. As things kind of wind down here in the United States for the summer holidays and things like that, we just had the last holiday on Monday, those of you who are outside of the United States. But I wanted to make this quick video just to walk you through the Non Farm Payrolls trade. So I received, it's kind of interesting because I got 3 emails just in the last 24 hours about how my trading system worked with non-farm payrolls, and if I traded it, which ones did I trade, what pairs, things like that, or what markets did I trade. So first of all, I want to mention that this trading system, the system that I teach with my program, the online coaching course and trading course, that will actually work on any market. I know that I primarily focus in on a lot of forex, currency pairs, things like that. It's something that I've been trading since I started trading back in 2001. My first trading account was actually a futures trading account. I was trading the E-mini S&P, and then probably 2-3 months after that, I found out about forex. I knew about forex, but I found out because emails were popping up and little ads were popping up for FXCM. So I opened up an account with FXCM, and I've been trading both ever since. So these systems, these strategies, they all work with commodities, they work with stocks, they work with crypto. I trade crypto on the weekend when it's a good idea to trade crypto on the weekends or to trade it at all. There are obviously times when you should stay out of the markets, and that's different for everybody. That doesn't necessarily mean that just because I stay out of the markets that somebody else is going to or doesn't have a strategy. Obviously, if you've been trading for a while, you know that. I mean, everybody, we can cover all these things all day long, and you've heard them all before. But it's true. There's so many different ways to trade. It's just the way that I trade, and it's what works best for me. And that's what I teach. That's what I share, is using this system where I start off with a bar chart. That's what we're looking at right now. We're looking at a 5-minute bar chart. And I want to walk you through a couple of different ideas. These are just some concepts that all led to the trade over the past few weeks. So this is a 5-minute bar chart as opposed to a 30-minute or a 1-hour time frame. If I was going to day trade, I prefer the 30-minute or the 1-hour time frame, but it doesn't necessarily mean that that's always going to produce the best opportunities for me. And I've said this many times, especially in my coaching course, that you'll notice that certain days, let's say, and I didn't know this when I first started trading. When I first started trading, I thought, I didn't first of all know what time frame to pick, so I just kind of picked one. I kept typing in, Google. I used to use Dogpile back then. I don't know if anybody ever used that, but I was kind of like one of those last holdouts. I didn't want to go to Google and use Google because everybody else was using it. But anyway, like an idiot, I was using them both at different times, but when I couldn't find what I wanted. But I would go into these search engines and I would type in, what's the best time frame to trade off of for day trading, things like that. And I really wasn't getting a whole lot of information. There was a lot of information, but there certainly wasn't to the degree that we have today. So it was kind of like whatever, I mean, that's basically what I came up with, was that it just seems like everybody's got a different idea. And everybody has a different trading strategy. So the trading strategy that I was using at the time, I was trying to trade breakouts, and I was developing that continuation breakout strategy, which is actually the same thing that I'm doing when I'm trading in ranges or consolidation phases that are either accumulation or distribution. I was actually doing the same thing. I didn't realize it at that time, but that's what made more sense to me, and that's where I was experiencing most of my problems, was on these breakouts, because very often I would trade a breakout as a result of being in some chat room where somebody would call out a trade, and I would get into the trade and I'd get stopped out shortly after, me and everybody else. I mean, these guys didn't know how to trade. So the 5-minute bar chart, some days, I remember when I started to realize that not every day is going to produce the same results, right? Not every day you're going to get the same trade at the same time, depending on which system you're using and what you're doing, right? Everything's going to be different. The markets are constantly cycling through these different cycles, small short-term cycles. I talk about this all the time, and then all the way up to these larger cycles that have a bigger impact on the markets. So the concept here is that even though I prefer to trade off of a 30-minute or 1-hour time frame, it's possible that when I sit down to trade at, let's say, the start of the London Open, if I'm going to trade Forex, the 30-minute or the 1-hour chart may not make any sense. It might not be providing any opportunities for me that make sense. So there was a move to the downside here, and this all takes place during the August 20th, the 21st. We go all the way over here to the right. So it was making a low. I'm going to show you a few screenshots that I also took to sort of document all of this. But basically, what was happening was the euro and the pound were printing new relative lows back around this time, during the 18th, 19th, 20th, 21. It was forming a bottom. It was forming an area of accumulation. And I needed to make sure that if I was going to go long, that it wasn't going to be a head fake, right? I mean, we're in a downtrend up to that point. And the 30-minute on this particular day on the 1 hour chart, what really wasn't giving me the information that I needed. So I was able to go to a 5-minute, and that's the case. It happens often. I have to take the responsibility, the personal responsibility, to go through the different time frames to make sure that I don't make a mistake, and to see what makes sense to me. So one of the other things that I share with a lot of my coaching students is that what may not make sense to you today will likely make sense to you in the future if you stay in this business long enough and you do it right and you're careful, right? You don't want to blow up your trading account. You don't want to put yourself out of business. That was an issue that I had to overcome. I knew along the way, as I was developing my trading strategies and I was learning, that I had a long ways to go. I mean, I remember saying to myself, in 5 years, 10 years from now, I'm not going to be trading anything like I do today. And I knew that back then. So you got to be aware of that. You have to be thinking in those terms. So what doesn't make sense to you today, don't try and trade it, because you're going to lose money. You're likely to lose money. Whenever I would get into a trade thinking, well, I got to do something because I got to make money, when I would jump in, even though it didn't make any sense to me and it wasn't my trade setup, I would lose. I would, in almost every single case, lose. So that led me to trading off of the 5-minute chart on this particular day, and I was okay with that. I knew that I needed to go through the different time frames. I didn't want to make a mistake. I wanted to be able to see what was going on. Sometimes lows or highs, even on a daily time frame, they might not line up with like a previous old low or high to form support or resistance. And you might be wondering to yourself, well, what's causing it to stop there? Because it seems like it's sort of in a weird location. It's not really bouncing off of a significant level of support or resistance, something to that effect, and even on a larger time frame. So it's difficult to figure out if you're going to be trading it in the right direction if you're going opposite of what was taking place. This 5-minute bar chart, the other reason why I say this often, why I like looking at a bar chart is that when I first started trading, I was looking at candlestick patterns. Candlestick patterns, they were great, and there's nothing wrong with them. I mean, if you like using them, I do have other charts with candlestick patterns or candlestick charts on it, so I can look at the patterns, but I'm scanning. So when I use my candlestick charts, I'm basically using it to scan through to look for, let's say, an evening star, morning star, bullish or bearish engulfing, something to that effect, some kind of a pattern that is going to create or likely could lead to eventually some kind of a reversal, but I need to see that take place at a specific level. And then I'm going to go deeper and I'm going to start looking at counting the waves and looking at volume to give me my heads up, to give me an idea of what is actually taking place here, if it's actually accumulation or distribution. And then from there, I'm going to be looking at the point and figure for my entry, and then from my point and figure, I can calculate where my take profit level is. Now, this trade overall, as a result of getting into this trade, and a lot of coaching students took this trade on their Forex accounts, those who trade Forex. And again, this works the same way, whether I'm trading the Dow, whether I'm trading the S&P, whether I'm trading gold, oil, it doesn't matter. It's all the same thing, even stocks. It is the same thing. It's the same thing. It is the same thing. So on this particular day, I was able to get into the trade, and it took a little bit longer than usual. Very often, if I'm going to day trade and I'm going to be looking at a 5-minute or a 30-minute, I'm thinking I'm going to get in, get out, usually within the same trading day. But that's not always the case. Some days you can't control it. It just takes a while. I'm going to show you with my point and figure, the screenshot that I took of the point and figure here in a moment. It actually took about a week and a half or so, and it didn't hit the final target until Non Farm Payrolls. So sometimes Non Farm Payrolls will give me a trade after with the outcome, right? The way people react to it and what happens with the numbers, right? How we interpret those numbers and what we expect. And then other times, Non Farm Payrolls just kind of spikes up, down, and then just goes sideways until into the close. And there really isn't any opportunity at all. I mean, maybe if you were to get in the split second that the news is released, but there's a lot of risk with that. So a lot of people don't like trading when it's that volatile and that risky. You don't know where your fill's likely to be. Your broker could slip this whole thing. I mean, you can get in like 17, 18, 30 pips away. I've seen it happen. And then other times I've seen people, and I've heard stories where they keep clicking the buy button or sell button, and it's not registering in their account, and they just keep clicking, and then all of the orders are filled later on, and it just wipes out their account. So many things can go wrong this split second if you try to jump in that split second that the news is released. So with this trading system, I'm just waiting. There has to be some kind of change in volatility with the point and figure. That's why I always rely on the point and figure. I'm not going to be looking at a candlestick chart or a bar chart where it could print something like, let's say this one right here. It looked like it was going to come down a lot lower. Let's say it was with news. I'm not saying that particular bar right there is where I'm moving my cursor. It was some news. But what I'm saying is if it was, And let's say it was a 30-minute or a 1-hour chart, and it looks strong, and there was a whole lot of volume coming in, and I'm thinking, okay, well, maybe this downtrend is going to resume. A lot of people would think something like that. And let's say it closed down pretty close to the lows, but then you're disregarding all of this information. How to classify the phases of consolidation, whether it's accumulation or distribution. That's critical. That's a critical component, because price is going to behave in certain ways and create certain patterns within these different phases: phase A, phase B, phase C, and D. And if you don't know how to calculate that, or if you don't know how to read that, the way that the market and the patterns are going to set up and the way it's going to behave, price is going to react within these different phases, it's very likely that you can get stuck in a false move and become very, very frustrated with the trade. So, for example, there's a bullish engulfing candle or a bar right here that would have been a bullish engulfing candle right here. You can see where it reads there's 596 contracts traded. This is pound futures, by the way. And back in the day when I first started trading off of candlestick patterns, I would have probably bought here thinking that it's just bouncing off this support level and it's time to buy. That looks like a really enormous bullish engulfing candle. Like, it's time to get in, right? That's what I would be thinking. And I know a lot of people make that same mistake. I was just purely trading off of maybe a simple indicator at the bottom and then the candlestick pattern itself. And that's a big mistake. Not always, but very often. This is much, much better, in my opinion, the way we do it. So you can see what happened eventually. It didn't go anywhere, and I would have become frustrated. I know exactly what I would have done because I did it many, many times. And when it starts to roll back over against me, I probably would have closed once it took out that low right here. And you can see it's just testing. And we need that spring. We need that spring in phase C to get into the trade. And then we need the test here again. And then when it breaks out above resistance, and then we see the test where it comes back and tests the area that it broke out of in phase D, that's also another signal. So I'm going to show you how all of this played out. You can see it on the point and figure. But it starts all right here, either with a candlestick chart or a bar chart. That's what I'm getting at. And this actually formed the low that we've seen over the past 2.5 weeks or so, since the 20th or the 18th and the 19th, as it was coming down into this range of support. Now, let me go over to some of the screenshots that I had here that I prepared. This one, I'm going to go ahead and show you what ended up happening after non-farm payrolls. So here's the same area right here. This area where I'm moving my cursor, this is my point and figure chart. This is the same area that I just showed you here, right here on the 5-minute bar chart. This is the same day, same area, right here. Now, there was 44 columns total. I get this question quite a bit. People will ask, well, how do you figure out how far it's going to go? What are you using? Well, the number one thing that I want to say is that, you've probably heard, if you're just kind of beginning with your trading career, or if you're still struggling with the idea of risk to reward, some people will argue, just take whatever profits are there. And other people will say, I don't want to get into a trade if it's not going to give me at least 2 for 1. With the reward to risk. Other people are 3 for 1, or some people are comfortable with just the 1-to-1. When I see the setup here on the point and figure, and I can calculate where it's likely to go, that will tell me if it's a 2 for 1, 3 for 1. That'll tell me. I can see it clearly. I know where my stop is, and I know where the target is. Again, not all trades are going to take this long for it to hit that final target. But based on the data here and the 44 columns and the way that I constructed this particular chart, that gave me a total of 44 columns with a final target of 1.3862. Now, I always say whenever we use point and figure or in this trading system, again, as I start off with the bar chart, counting the waves, you can see over here the way I was counting these waves. I'm not going to get into too much detail because there's a lot of information inside of the membership area, a lot of videos on real trades, stocks, crypto, gold, oil trades, all of it. I mean, it's all in there. And we're counting the waves to be able to determine where it's likely to give us a solidified reversal that we can actually count on. We know what's going on. Some people refer to it as smart money. Other people that follow Wyckoff would say it's the composite operator, things like that. We're trying to gauge when it's likely to break out and start moving and eventually not go any lower than what we see here. We know that the testing's out of the way. And again, the way we do that is to calculate these phases A, B, C. I don't trade inside of phase B. I trade sometimes in phase C or D, depending on the setup. And I'm counting the waves and I'm measuring the amount of volume and the activity. So this is that constant battle, that supply and demand battle. And, a lot of people talk about it on YouTube. A lot of guys that just started off maybe in the last couple of years trading, and they really don't have a good grasp or concept. They don't really understand it. You can tell by the way what they're describing. But I'll leave it there. I'm not trying to knock anybody here at this point. There's so many different ways to trade. But what I want to show you is how this system works for me and how it works for my coaching students. This was a really big move, and it took a lot longer than I thought. But at no point at any time along the way did it ever seem like it was going to not work out. Everything continued to remain. So when I mentioned the final target here at 1.3862, well, we're getting in here right around the 1.3640 area, actually a little bit earlier than that or on this retest. I mentioned that we can sometimes get in on these tests. Let me go ahead and open this up. Sometimes we can get in on these tests in phase D after it breaks out of the range of consolidation and pulls back and tests that level again. That's more confirmation. There's an entry here, but there's a second entry if, for whatever reason, I missed the first entry. What's important is that I have all of this information figured out before I start jumping in. And you don't want to jump in and then try to calculate where your targets are, because it's possible that you could be jumping in on that second entry or the third entry, and it's already sitting at the target that the information and the data provides. So you want to be careful with that. You want to make sure you calculate everything quickly and accurately. So as I was talking about here a moment ago, as it develops, as this trend and this reversal develops and it starts making this new uptrend and this markup phase, it's just another area of reaccumulation. That's what we're looking at. We're looking at another level of consolidation before it breaks out and moves up again, and then it'll form another area of consolidation and continue along the way. Now, if this would have continued on, it's very likely that there would have been another area of consolidation, and I could use that data and find a much further target. So every single time I have a trade, I have a conservative first trade, which we scaled out at, if that's what we want to do. Some coaching students scaled out. Some coaching students continue to hold on to the trade. As all of this continues to unfold every day, every hour, whatever time frame it is that you're looking at, every trade is going to be a little bit different. But at no point did anything indicate that this was not going to work and that it was going to be a full-on reversal, and these were the areas of resistance, and it was going to reverse and come back down again all the way to the lows. That never really appeared. That there was nothing to worry about along the way. Sometimes it looks a little tricky. It's not always going to look this picture perfect. Now, I know that looking at a point and figure chart like this might be a little different and confusing if you're not used to it. But I'll tell you, once you get the hang of point and figure, you're never going to want to trade without point and figure again. I mean, that's just the way I trade. That's the way I look at it. Every one of my coaching students that goes through this program ends up using point and figure and relies on point and figure the way I do. It's just, it's that important. I mean, I feel like I would be trading with, somebody with their hands over my eyes and I can't see the charts. It's really that important. So anyway, there were multiple areas to scale out of the trade. Again, the final target is based on all of the data that I have here. And again, I could acquire more data along the way to get a much further count if that's in fact what was happening. But the other issue is, and I want to go back here, this is something else that we talk about. And every once in a while in the coaching course, we do I'm going to go to a 4-hour chart so you can see what I'm talking about. Every once in a while, we do an exercise, or you can do it on your own. And I've been doing this for a long time. Now I just switched to a 4-hour bar chart on the pound dollar. And what I'm getting at is that sometimes, and this is a really interesting exercise when you see it pop up, there have been times where I could see that the lows were printed based on, let's say, a previous non farm payrolls. And then for 30 days, it'll rally in whatever direction. It doesn't really matter. I mean, you can go back and just, practice and take a look at some practice charts. And then it would top out with the most current or the most recent non-farm payrolls that I'm going to trade. It top out or bottom out. It doesn't really matter either way. Now, that's not always the case. I'm not saying that that's going to happen every single time. What I'm saying is I've traded non-farm payrolls so many times over the past more than 20 years that I'm aware of these different possibilities and these outcomes. So it keeps me on my toes, right? I have to be prepared for these different possibilities, and I know where my final take profit is here at the 1.3862, and this actually happened right there where that arrow is. You can see that's non-farm payrolls. It was actually 5:30 or 8:30 New York time, 5:30. I'm in California, 5:30 in the morning. It actually spiked right up. It ran right into 1.3862. Pulled back down, and then continued to move up for the rest of the day going into the close. But that was about it. And then for the rest of the time, we've seen it start to move back down since, and yesterday was a bank holiday here in the United States. Again, this is a 4-hour chart, and you can see that it sort of topped out there with non-farm payrolls, and now it's starting to, for the most part, not go any higher. I'm not saying that it's not going to go any higher, but what I'm saying is knowing that that was a possibility, that non-farm payrolls could have been sort of the end of it, right? So at the beginning, we got into this trade. As things unfold along the way, and I'm into this trade with my point and figure back on the 20th or the 21st, I'm holding all the way through into non-farm payrolls, and nothing was offsetting the direction here at any given time. Considering the fact that there was other news announcements along the way that still didn't change the direction, and then we went right into non-farm payrolls, and that's where it stopped on that particular day for the most part. That's where it sort of reached its high or highest area and then started to roll over. Again, I'm not saying that it's not going to go any higher, but what I'm saying is I need to respect the fact that I have this take profit level based on my point and figure, which I totally trust, and I know it works like this every single time I do it right, and that provided over 230 points. Now, 230 points, if you're not used to trading Forex, that's quite a bit if you're trading a standard lot. A standard lot is the equivalent, they used to call it a 100K account, on average, you're getting about $10 a pip on the pound dollar or the euro dollar. So 230, let's say 230 pips or 230 points, that's about $2,300 on one standard lot or one contract. I use both of them interchangeably because I trade futures at the same time. It's pretty much the same thing for the most part. I mean, when we're just kind of talking, right? So you know where I'm going with that. Let me show you the other chart, though. This was the other chart. This was at before. So this was the night before. I actually did a no, I'm sorry about that. This was not the image from the night before. I did an update because I got some more questions. Am I still holding through non-farm payrolls, or should we close out the trade? That was one of the questions from some coaching students. And it was sitting right around here, right around the 1.3840, 1.3842, and then it dipped down to 38. It was kind of sitting around here. And some people had thought, well, what if it doesn't go any higher, and that's it? Like, it can happen. We had already scaled out and banked profits at the first target. Remember, we always have a conservative first target, and then the final target is based on that data that you saw with the 44 columns. But, again, we were able to hold through. Nothing really indicated that it was going to reverse and go the opposite direction. There was really no signal at any given time to sell it or to short it and to think that it wasn't going to go any higher. So it was just a matter of waiting for non-farm payrolls to be released, and then it ran right into the 1.3862. Actually, as I showed you in the previous image, it went a lot higher. You can see here, but that's basically what ended up happening with non-farm payrolls. Now, there is an opportunity if I was to change the way I configured and set up this particular point and figure chart so that I could have taken the trade had I not been into the trade before non-farm payrolls. But this is one of those events where you have to sort of have enough experience. I mean, that's what kind of came all into play for me, was that I knew I was getting in right around the 20th or the 21st, let's say, and I'm going to hold, nothing was really changing, and I know that I'm, looking at non-farm payrolls on a Friday. I knew all that, and as we just kept making, we just kept punching and making new highs. The lows really weren't taking out any significant lows, and everything was holding intact, and I was aware that sometimes non-farm payrolls can sort of put a top or a bottom, even if it's just temporary, in the market or in that trend, and slow things down for a while, because there's a lot of hype. There's a lot of, I don't know, I want to say excitement, but I remember hearing stories back in the day. I think it was like 2003, 2004. There was a lot of, there was groups that would get together, and these groups, they were like legitimate groups. These people would come together and trade. They would pick a location, and let's say some guy set it up in his garage, and he would have a bunch of tables set up with internet connection, and there'd be like 10, 15, 20 people, and they'd all come together, and they would just sit around and talk, 30 minutes or so before non-farm payrolls, and then they would just trade non-farm payrolls. But they were news traders. It was a big, fun, exciting thing for a lot of them. News trading used to be exciting for me too, but I'm here to make money. That's more exciting to me than just the excitement of opening up a trade. When you first start in this business, it's exciting to open a trade and then to see what happens, right? You're looking for every trading opportunity. That I get that, but that's not the way it goes. I mean, you stay in this business long enough and you're here to just make money. You want to be right 100% of the time. I know that I'm going to have a failed trade every once in a while, but my approach and my attitude is I've got to be right 100% of the time. So I've got to do a lot of work every time I look at these trades and these setups, and I want to make sure I'm doing the right thing. Again, that's going to make it a lot easier for me to earn back any loss, is the fact that I am that dedicated and that disciplined to always trying to execute a trade that I know without a doubt is going to work. I might be wrong, but without a doubt, in my mind, it's going to work. I did everything that I'm supposed to confirm this trade. So that's what happened with non-farm payrolls. The euro dollar actually did the same thing. Euro dollar provided pretty much the same, almost the same profits. It was the same setup, same time frame that I used. So with both of those trades, even one standard lot, that's well over $4,000 just holding these two. And again, there was really nothing to worry about, and it ran right into that area, that take profit level on with non-farm payrolls.